Test, 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 test. All right, vocals look good. Good morning, everybody. We are here trading London session. This is another attempt at London. I don't know how it'll go, but we're gonna try it out nevertheless. So let's get over to the charts. Hey, what's up, Delphine? Good morning. Yeah, we're up. And actually, I see a potential play right now, but we have British British Construction PMI at 4:30 a.m. So it's in a couple of hours. We're gonna see what that turns into anything here. So that's the only thing on the economic calendar I want to take a look at here. Let's take a quick look over at some of our earlier data here. So I want to take Asia session low and document that here. So here's the what I'm gonna first chart what I see immediately, and then I'm not gonna be able to stay here much longer past 5 or 6 in the morning. So this is all that really matters to me here. I'm not gonna chart it out to the rest of the day, even if it is going to be important. I'm not going to be able to use it. So I'm only going to be trading the session to session liquidity. So this will be a different style of trading. Okay. So we see that relative equal highs up here was taken already. And we saw that relative equal, low, short-term low was taken here. So we'll dig into this a little bit. Hope you're doing well too, Delphine. I am still waking up. Definitely has been a different shift. So we're taking a look here. Let me see if there's a 5-minute. I'm essentially looking through the 5-minute, 4-minute, 3-minute, 2-minute time frames. I don't have that on this chart, but on the 2-minute chart, there's a buy side imbalance, sell side inefficiency here. Let me draw this out. So you see a big blue box here. And at that level is where I would like to enter. I'm going to enter live. Do not follow me if you are weary of price, but we're going to enter here 2 contracts. And we're going to target this area of liquidity first, and then this one second. We'll see if we get there. So there is another 2-minute buy side imbalance up here. I'm going to check the 3-minute. So we're going, I'm flipping between the 5-minute, 4-minute. 4 minutes, got 2 minutes left on that one to finish finish its candle. The 3-minute one has, it actually has a, actually the 3-minute one has a potential buy side imbalance there and there. So I actually would like to enter at the 3-minute one, and we're gonna see if we end up getting a movement back down to here or if we get a runaway. But this does feel like displacement to me. Down to the lower time frames, we kind of see how we left this gap open. So this might be a breakaway gap. We might never come back down to it, which kind of sucks, but then that leaves me to think that we have room on the lower time frames to potentially take a long here. So remember, this week This week's candle has been a weekly expansion to the upside. Thursday can reverse, but until we see that, we are going to assume that we'll continue, maybe come back down to the IPTA 2040 60-day high that we broke out of. We're going to watch that level very closely today. It's a very important level that we're going to want to keep on our radar. So something I want to do here as well is, oh gosh, there we go. There we go. So this high is 19112.50. So I want to set this as, I want to label this as Asia high, buy side liquidity. And then likewise, I want to also mark Asia low, 19067.75. And I want to mark that Asia short-term low, sell side liquidity. So we took sell side first, now buy side. So I'm noting that we haven't taken out, we have not taken out the sell side liquidity here. So I do consider this to be displacement. Let's go to the 15-minute chart though. Notice from our new week opening gap how we had accumulation, manipulation, manipulation, distribution, right? So our power of 3 is currently that we're heading higher. So we're trading with that bias that any movements lower, we're going to consider those to be movements to move us higher and take out higher areas. So on the 5-minute chart, we have a minute left. There's a fair value gap forming here that you can see that we might come down into. The 4-minute chart already has, and I can kind of like put this here. So the 4-minute chart already has a buy side imbalance, sell side inefficiency here. Let me see what that spread is. 85, 79. Okay, I can accept that risk. Delphine, do you have any projections into unknown territory? Yes, let me do that real quick. I will get that to you in just a moment here. Let's see. 67, 77, 87. Nope. Let's see. I think I have to start here. 0, 0. Okay. Let's start from here to here. Give me a second here to line up my data. This low is 19,051 exact. 19,051 exact. And the high is 19,112.50. Look at that as the flout. Okay, let me take a look and see what we have here. There's one there. Lower. Okay, so with this, I need to take a quick look over at these are here. One. Okay, so we're assuming if we are assuming that we will continue higher, let me grab a couple more projections here. Ba, ba, ba. One, two, three. One 116. Those line up pretty well. Make sure. So this candle is 3 o'clock. It's not quite 3 o'clock yet. Leads up to there. Let's see what else lines up here. That seems a little too high. Okay. So a weekly, this is way too far out to be a near state projection. Let me check one thing on my previous day to make sure I didn't line something up improperly. I think I did. $16, $15. I did. Okay. Let me change this to 18684. 684.25. It should be this candle's low. All right, give me 1 second here. I have to fix something on a previous day that I refer to. So just give me 1 moment here. Looks like we didn't get our fill though on the 5-minute or 4-minute buy sign imbalance. It's okay. We think that we're going to get that fill anyways, so we'll be patient. While we wait, I'll get this projection out for you. Delete, 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 because that was incorrect. 2, 3, 4, 5, 6, 7, 8. Okay, there we go. That should line up a little bit better now. Let's see. We have 1. Let's get rid of these here as well and fix our projections. Okay, so Okay. Here we go. That looks a little bit better here. Okay, so the first area of projection I think that we're gonna get to today is one projection is 19175, or I'll say 74. I like that level. That is a kind of like 3 deviation move from where we're at right now. That lines up really nicely with what I see. Beyond that, let me actually mark this so that I have this here. Beyond that, ooh, that's pretty nice as well. Okay, so beyond that, I also see, let me draw these out over time. Beyond that, I also see a projection level of 19,297 as a possible to the upside. I like those levels there. Really nice projection there. That's if we even get up that high. And then God forbid that we have another pie in the sky level here. I think this is a little too high, but for today, I think it might be a little too high, but super high projection 19,420. Those are key levels that I'm keeping in mind. If we continue expansion today, then we have non-farm payroll run away. Those are levels that I would be looking at next from a swing projection perspective. So let me see if I can make this available on all charts. Let me see if I like that or not. Should be okay. Yeah, I don't like putting that on all charts, so I'm gonna keep that on 15-minute chart. So yeah, I have those as projections there, and I like the 19,174 projection the best. That's obviously the lowest hanging fruit. And Delphine, the other thing that we need to consider is that we are on a Thursday. So, and we've had a wicked, absolutely gnarly weekly expansion into all-time highs, right? So we've blasted through this all-time high here. We no longer need this. We no longer need this because we've already graded those. And we've blasted through these here. So I have no more need for that. I can clean up the charts a little bit here. Let's remove this. And I'm going to start to clean up some of these here. Let's see, this is a double. Don't know why that's a double. It's weird. That's weird. Seems like data didn't save or something. I think this was meant to capture this monthly level. I think that's a prior monthly high. Yep. Okay, so I'm gonna try and clean this up just a little bit here. Get rid of some of our projections at our lower time frames that we don't need anymore. We busted through all of these, so I can clean up the charts here as well. We'll make these a little bit cleaner for us. Get rid of some of our old items here that we do not need anymore. For our volume imbalance, we traded to that already. We can get rid of that. Relative equal highs. From yesterday, we can remove that data as well. All of this data we can remove. Oh, looks like we got filled. Cool. So I like to take a sell limit here, and then we'll take a little sell limit there as well. So currently we have this area. We have a 5-minute bullish order block that we potentially could go to. Our risk on the 4-minute chart, our risk should be below the 4-minute chart here. Let me move this. So below the short-term low, which forms below this. Technically, I could keep it below this fair value gap and should be fine. But this is the trade that I'm taking. This is the trade that I'm looking at today. Now note, we took out buy side liquidity, and we might go to take out sell side liquidity here. So if it takes it out, I'll show you. I'm okay with it being stopped out here. If it just drops out, takes out sell side liquidity first, I'm totally okay with that. So we'll take that loss, and then we will look for price to re-enter after we took out this low here. All right. So while we wait for that, if we get stopped out, we get stopped out. But look at this on each of the prior times. Look at what we saw in the past, right? So even in this today's history, we saw that at this low, shorts get taken out here, and then we see a displacement to the upside. We travel back down into a fair value gap, and we trade higher, eventually taking out what? Short-term high here. We don't take this out completely. It's just a quick little blip there, and we don't get really true displacement. We get down to a fair value gap, and we get some more movement before really taking that out. And then we see true displacement below a short-term low. Okay, that indicates to me then we have movement down here to the downside to potentially take out an internal range liquidity, or B, an external range liquidity. So we had this here serves as a potential minor short-term low, and we took that out already, right? I'll kind of scrunch it up there for y'all. So you kind of see how like we're looking for external range liquidity there. It can still go lower, but from what we're seeing here, because we saw this kind of displacement here, and let me duplicate this just to show you what I'm talking about on the 4-minute time frame. We can see this return to fair value, and we can see this higher low being formed. Low, high, lower low, displacement higher, bullish breaker here, right? Consequent encroachment of that breaker we have as this move here, right? So the midpoint here, look at what happens. We take this breaker, midpoint, we stop dead in our tracks, and we're able to now see us create, hopefully, if this minute 4-minute candle closes in a minute and a half, hopefully we're fortunate enough to see an expansion higher as we are anticipating. So let's scroll over a little bit, get this 15-minute chart over here. Okay, so we see this sell side got taken here. We saw drop down into bullish order block on a 4-minute time frame. You can see that here. We see a shift in state of delivery where we have bullish order block, bullish breaker, fair value gap to the upside, displacement, bias being bullish on the week, and targets ahead of us on the 15-minute chart. We have a target at 19,102. To be safer, we could leave our target here as our first area of defense, and even so 19,000, yeah, I think we can see this reach for, oh, I don't know, whatever that is, about 11, 12, 13 handles or so. So we want to take this as our first profit here, because look what this is over here. So if I project this out here and swing grade this, wicks are potential gaps, right? So I am watching to see if this fails just below the midpoint of this wick on the 1-minute chart. If it does, then I might need to consider and look at where we traded to here. Sell side imbalance, buy side inefficiency, right? So let me mark this out here so that you have this on the charts. Oops. That's not what I wanted to do. Let me mark this consequent encroachment out. So that's a wick consequent encroachment there. If this does not take that out, you are at risk. I think we'll see one more drive up, barely take this consequent encroachment out. But if we don't see it take this high out, then we are going to need to close our long position, because we're at risk of it coming back down, taking out this 19,067 Asia low before traveling back up to the upside. Sorry, I missed the chat here. Wahoo, thanks. Jacques Van Munya, why not short it? We're in a huge premium. That's a really good question, Jacques. So the reason why I'm not shorting it is that we're still operating from a weekly expansion perspective, and we just broke out into an all-time high, right? Another reason why I'm not shorting it here, I see that we had a low, lower low, higher low formed here, and we were able to support that. Now, could it have gone down, Jacques? Could it have come up here real quick and then just drop down completely? It still can. So I'm framing this noting that we saw volatility. We saw this kind of looks like true displacement to the upside, right? So this is reading price action and institutional order flow. Over the past hour and a half, we saw price kind of diddle around. We saw these large black candles, and then we saw price kind of just dawdle around until it took out this short-term low, right? External range liquidity here. So low, high, lower, low, bullish breaker. Confluence is here with not only there's a bullish breaker here on the 4-minute chart, but there's also a bullish order block. We trade down to the midpoint of the breaker. We have a fair value gap here. That's 3 confluences, right? We see displacement up higher. We took out a short-term high. We came down and are now likely to trade up to this wick's consequent encroachment of this wick. So this is why those are all the reasons why on the short term, I'm still operating under a weekly bias being to the upside. And truth be told, this run from this high to this low, if we were to drop below 19,093, I could take one more contract and add to this position, assuming that we would end up going for that high there, right? Going for that 19,112 Asia high. But I'll settle for taking a contract off at, maybe 13, 14. How many handles is that? Entered at 85, 95, 100. So that'd be like 15 handles would be my first profit target there. Since it is a Thursday, I'm not like Delphine asked for some projections, so I think if we break out, that we still have a shot at continuing higher to that area. But could we reverse and it just drop everything out? Yeah, of course. We need to be prepared for that, honestly. So we're seeing, and what we're seeing here in price is really crucial, because we're at, again, yeah, you're right, we're at a really crucial high. But we're also on a Thursday in the middle of a weekly expansion, right? So I'm using my weekly bias that I outlined on Sunday. There's one, I think we just took profit there, so we can now move our stop into profit. We've taken and de-risked our entire position here. If we go down and lose everything, we've realized $28 worth of profit on 2 micros, which is great. So I'll take that any day. 15 handles of profit. Let me see what the 4-minute looks like here. So here, 87. That's reasonable. There's still fair value gap down here that we could trade down to. I don't think we will. I prefer this to stay open here, honestly. And I'd like for us to now shoot for this Asia high, if at all possible. I'd like to see this buy side taken, and what's now formed below here, right? And actually, Jacques, hopefully that helped, Jacques. Heavy duty, devil's mark on the 1 hour hasn't been manipulated yet. Let's take a look. Oh, wow. Look at those beautiful green candles. Yesterday's session was incredible. Okay, so we have the hourly looks like just consolidation. So that's why I'm looking at taking out liquidity where I can, right? So we're going to watch this really closely now that we've pretty much engineered. Look at this high here, right? This high is 19,102.75. This high was 19,102.75 as well. Exact highs here, right? So I like that I want to see us close below that. So we just took that high out, right? So what do we have next? We have a market maker buy model. Original consolidation. First stage distribution. Second stage distribution. Terminus. Displacement. First area of accumulation. Return to terminus. Second stage of accumulation. I would assume that our third stage of accumulation will take us back above because of our bullish bias here. It doesn't have to. This could serve as a final stage of accumulation here. So we need to be very, very careful. I am willing to let this go down a bit further. I think I should be able to take our setup here So I see this low, high, lower, low, displacement higher. So I think price could return back to this up close candle as a bullish breaker. That's the largest one, the tallest up close candle here. So I actually can move my stop loss to just below that bullish breaker, because if we fall below that, then we're going to likely tumble down into this Asia low. So what do you mean by the devil's mark, heavy duty? I'm not familiar with that term. So you got to see a nice little live trade. So imagine you're using a mini on that one, and that's $280 right there, close to $30. It's just reasonable trade for London. And then if you're using 10 minis, that's $3,000 right there. So all a matter of scaling over time, right? In London, okay, so now we're seeing a little bit of retracement at that level. Notice how we did get a close above it. So let me take a look at something here. Let me get rid of these lipsticks that I don't need anymore. These are all things that I had on my charts, but just for visualization. Otherwise, I just keep it relatively bare. All right, so we have a low to high. So if we start to close below this area here of 96.94, stupid little freaking fungus gnats are annoying. Got it this time though. I don't know where they're coming from. All right, so see how we ran down at that level? Am I worried about that? No, I'm actually thinking about adding a contract here. But again, I'm not going to add a contract knowing that we have the capability for taking into external range liquidity. This counts as first minor external range liquidity. So it could reach all the way back down here to tackle this low now. So there you go. We got stopped out. That's fine. $35 on 2 contracts. I'll take that. Did end up taking the breaker out a little bit, colored outside of that line. So it is what it is. If it runs up higher, then we missed out on that there. But you can kind of see how like this would be below that that 50% mark. It traded down to nearly optimal trade entry. And in fact, if we lower these to the actual bodies of these candles, we can see that it traded almost down to this bullish order block combined with this buy side imbalance, sell side inefficiency. So I think that it's going to end up running for this Asia high, but I'm now out of my position and it's beyond the 60% retracement level. So I can't enter anymore unless it dips below that 50% mark. And we're right in the middle too. So now we're at risk. So where we're at right now, we can see that this short-term high got taken there. Right there. You see that on the lower time frames, right? So we're in the middle of a range here. This area that you're trading in. Oh, a candle with no wick. Okay, gotcha. So this area we're trading in, this middle portion, you do not want to be taking trades in this area. All right. Especially in an Asia session below. You want to wait for price to either break out and take out some form of liquidity here so that you can then look to see if there's additional internal range liquidities for optimal trade entries. to see if there's major displacement down to the downside, because note yesterday we had a huge up day. So what does that leave? That leaves a lot of low resistance liquidity run potential. So I think that non-farm payroll is going to take all of this out, or maybe it leaves it open as a gap, and we start to see us moving even higher. This daily gap here is going to be really key, right? Very huge, very huge. So we have this SIBI. So you remember this SIBI I mentioned yesterday? And then this is this monthly candles wick too, right? So this wick, we traded to that as well. So I don't need to consider that wick anymore. I can remove that monthly wick. That was there just as a target before we had a target. So the daily SIBI can remain. That's fine. That can be referred to as a balanced price range. So if we end up trading all the way back down here at some point, this daily SIBI, I would treat this as an inversion fair value gap now. So keep that in your notes for later. I think it'll be important to refer to. Let me get rid of some of these real-time hour highs down there, though, that we no longer need. So these I can get rid of. Keep your charts, keep my charts clean, at least. Notice on the real-time hour charts, so remember, these were our real-time hour highs, right? So we have a liquidity void remaining down here, and that daily area also has a sell side liquidity. So there's now draws on liquidity forming to the downside. I'm going to remove the relative equal highs here. I'll be able to see that there's a liquidity void down here, so I don't need to mark this technically. I mean, it's fine to leave it there, but I can look at a real-time hour chart and see that, hey, there's a liquidity void as a draw. So I don't need this on my charts, but you can keep that on your charts just to note it there, okay? So we have 15-minute sell side liquidity. We don't need that anymore. We're too far beyond this. And then also on the daily, we had kind of like identified potential areas for this to move down, right? We never got down to this daily wicks consequent encroachment down here. But note that we did trade down to the consequent encroachment of this tail here, and we immediately shot up, and that was Wednesday. So these I can get rid of here. There's no more need for them. I'm no longer using them. I can get rid of this as well. That 1 day consequent encroachment, I can get rid of this now because I'm no longer referring to it. And then, of course, we saw the weekly wick not get traded to as well. That was important this week. Remember on Sunday, I had this wick. I thought we would trade down to it, and then we would bust upwards. We ended up getting that to happen, right? So Thursday can be a reversal day. Look at what's happened here, by the way. Let me get the 15-minute real-time hour chart out of the way. So on the daily chart, you have a huge range there that you can now target, right? And we actually have a oh yeah. Okay. So on the daily chart, we have a low resistance liquidity run. Maybe this turns in, if this stays open, that could be a breakaway gap too. I highly doubt it's going to stay open. I think we can return back down to that daily balanced price range now. So I'm keeping that on my chart just as a note to myself. And then also those real-time hour gaps, I'm going to keep that on my chart too. I will move it so that it's more accurately reflecting the liquidity gap, liquidity void in the real-time hour charts. So notice how taking profit has helped me maintain the maximum profit run, 15 handles, right? From entry to exit, you can see You can see my entries and exits right there. Sound logic. I didn't take the midpoint here, but you could have. We saw further fair value gaps down here. We could have taken those because we know that, hey, there are lower fair value gaps to be taken on the 1 minute chart. But within this move, what else could you have done? You could have taken this swing and seen, oh, this is optimal trade entry. Let me take a shot at equilibrium to lower my risk even further. Or maybe I take a shot at the 61.5 optimal trade entry level, right? So there were so many confluences around this area, and that's why I was able to have confidence that this was a high probability play. We weren't looking for price. Remember, we weren't looking for price to only go up and go up forever, right? We were cognizant that this was a potential minor short-term high to be taken, and look at what happened from there. We're seeing some uncertainty, right? Jacques Van Munya, revolution is crazy. How is the trade? Trade's done, right? We went from external range liquidity, minor external range liquidity, to minor external range liquidity, and we got stopped out. We just got wicked. Look at that though. That's really interesting how it went straight to my stop right there. So very interesting how it went there, plus one tick, right? Very interesting there. So do I think you can head higher? Yeah, maybe, but people who are trying to get in are going to get plastered. And what has this done now? This has created a relative equal high situation over here. So now we have minor relative equal highs up here, right? And down here, I should just get rid of the other one, honestly. I'll double up just for good sakes. Which means I should leave this one here just for the sake of it. So you can see how late longs are getting crushed here. So this kind of movement, we took out minor relative equal high buy side liquidity. This is also a minor relative equal low. These here can be treated as if they're relative equal lows. They're not, but these two can be treated as relative equal lows now. And you know that there's not only these relative equal lows, but these relative equal lows. So I like this kind of a movement. I like this short-term low being displaced, return back to fair value. This now sees further displacement. 4-minute candle is closing in 1:50. I kind of want to take a short here, back down to external range liquidity here, but I don't know. I don't like trading in the middle here because it could just completely shift, right? So I'm not going to take any trades here because I don't see something that is as high probability as this was. This was very clean. This, not so clean. I don't know what direction it's going to go for. I would like to wait to see if price trades below this low, targets the rest of this buy side imbalance, and then continues higher from there. If that's the case, then I will, if we take out these three, or technically these 2 points of liquidity, then I will look to see, is it a stop run for turtle soup to head higher, to take out Asia high? That would be my next consideration, is that we probably are generating or manufacturing liquidity up here so that later later on in the day, once we take out sell side or return to a what would be a sell side internal range liquidity, we don't see any of that here. No internal range liquidity. Note that, right? We have this down close candle, which we've traded up from once, twice. So we'll see if that continues to hold or not. I don't think it will, but for the time being, we wait to see if we see core displacement. Like, do we see a high, higher high, lower high? Do we see that as a failure and we see displacement lower? Then we have our Thursday reversal and new week opening, or the non-farm payroll Friday could rocket us back up, or it could rocket us down into this daily gap that's forming now. So non-farm payroll is going to be important. Note where we came down to. 4-minute time frame. We came back down to that buy side imbalance, rejected off of this, came into this premium, sold off from there. We're right in the middle. You don't know what direction it's going. Our bias is bullish, so if we were going to take something, we want to wait for sell side liquidity to be engaged first. Okay? Is this, hopefully this has been interesting or insightful. Is everyone having a good time? Let's see how many people are even here. Oh, 7 people watching. So 7 of you are early risers. Hopefully me outlining this has helped out a little bit. I'm going to remove this BISI. It's too high of a premium. That 4-minute one I'll leave there. There's even a 5-minute one there that was smaller, but the 4-minute one was the better one, I think. So if we hold here, then it's possible we see, if we see a continued move higher here, I'd like to see us move higher and take out Asia's high, and then maybe then we get a reversal. But we're seeing mostly higher lows continue to be formed, so we need displacement. For those of you who are able to trade New York open, that's going to be these relative equal highs, seeing which one gets engaged. If you see major displacement below, like if you see a big, like New York opens and we've only consolidated throughout London, if you see like a huge displacement candle, you can then take a look and be like, okay, what lower time frame objectives could we trade down to then, right? But you need to see that kind of displacement first before you decide to short a weekly expansion to the upside, right? There will be a lot of shorts that got squeezed here, and any new shorts, if the algorithm decides that, hey, I want to continue spooling, you know, previous all-time highs, when we broke those, we instantly sold off, and then we had a couple more weeks of selling or buying, and we continued to squeeze. So shorts squeezed, and then eventually these shorts also got squeezed, right? So this short-term high, people sold off from there thinking this is the high. Nope, they got squeezed. So when we're in this weird territory of all-time highs, you need to be very careful about being a bear during these. Remember, about a month ago, I also pointed out that we have the Treasury here as a tentative schedule of Treasury buyback operations from May 29th, which is a week ago. We have more buyback, more liquidity support. All of this is happening into a month of June, which is generally more consolidation. Now, remember what Michael says. We had a month of May, right? So this was May. May generally is a bearish consolidation type month. This did not consolidate. So that leads me to believe that June and July are going to be really wicked nice months for longs. So I'm still of a bullish bias. So until we see otherwise on the higher time frames, I'm going to assume that every single down close candle on the way up is going to be leveraged and respected. At least the mean threshold of it will be respected. So okay, so here's why you can kind of see why I don't really enjoy trading in the middle here. Why we took profit at that key level. Why we got stopped out here. We would have gotten stopped out again if we tried to go long there anyways. So price is leading me to believe that if it fails here, then we could head down to take out this minor relative equal high. Now, this is a minor liquidity, so it doesn't have to go all the way down to this wick. But notice another thing here, okay? So notice this wick. Get this straight here. Notice that we traded down to this wick. Oops. Sorry, I have the wrong. There we go. So notice how we have the 50% mark being 19073.50. So the low here, what is this low of this candle here? 19073.50. So this also leads me to believe that because now we might so here's your, oh hey, team push from New Zealand. Oh, that's so cool. That's really neat. Welcome from New Zealand. So real quick, I'll get to your question there in a bit. Let's see, heavy duty, very insightful. Thank you. On night shift in the US. Yes, good. So this is a setup that I see very often, and if you see this, you can keep your eyes out for it, where you have like a 15-minute or above wick, and you see a short-term low formed right at the consequent encroachment of that wick. Watch for when price comes down to that specific level, okay? So when it comes down to this level, if you see on the lower time frames, if you see it kind of like come down here, I'll try to visualize this, but let's say you have a few candles and you see it drop down to this low here, and maybe like, maybe you see it drop down here, but you don't see it go all the way down to 1919067. Like, you don't see it come down here. You see it start to retrace here, right? See something like, do something like that. Be on the lookout for something like this to form. If watch for, and this is a model in itself for anyone that's looking, when you see these tails, and it can be on the wick side too, but when you see these 50% marks traded to and there's a short-term low, when you see that short-term low traded to and instantly we see displacement to the upside, you can take a long anywhere in this vicinity here. You can take a long anywhere here as long as you see, you're likely going to see very quick motion from it. So you might not get a return to fair value. It might just keep on going like this. So anywhere around this first candle close above this level, you can take a long and continue higher. Yes, you can wait for displacement, retrace back down to it, but you might not get that if you see it. So that's a really, really key, very nice setup that I often will look for. Your bias has to be there. You have to really believe that we're still in a weekly expansion, that we haven't reached the point of we haven't reached the point of true bearishness yet, right? So you have to wait for those kinds of setups. And if it displaces all the way through, so be it, you know? If it goes all the way down here, well, fine. Look for something that forms here if you have a bullish bias. If you have no bullish bias, look for a displacement lower here, a return back to a high, low, higher high, bearish breaker, and then take that to sell to the downside because you know we have liquidity to the downside that we pass through. So team push, what ninja script are you using for the session times? I don't remember what it's called. Let me see. Something called color regions. I've had it for a long time, but I don't know where I got it from. I don't remember at this point in time. But it's called color regions. I use it to outline my different sessions, right? So Asia, London, New York, London close, and yeah, those are the main sessions anyways. So you can kind of see there's usually one major move per session, right? In these cases where we had a huge move, be wary of large moves during the New York session after a huge range day, because what might happen is you might end up seeing it just consolidate during the morning. Oh, look at that. Really nice movement off of that 4-minute. Yeah, I want to take this up, but it's just a little bit too dicey here. It's just dicey enough for me to not want to take it higher. You know, it's still stuck in the middle. So remember, we have a British Construction PMI happening where if we, depending on the values that we get, we are seeing positive values here. So if we continue to see positive values at 4:30 in the morning, that's when I'm going to look for the next potential volatility run. I want to see a return to internal range liquidity on the discount side before we head longer. But this volatility could just, you know, we could see a ramp up all the way to this. And if it's a bad number, then we could see a sell off, right? So we're watching, and what we have done on the filters is filtered not just United States, but I'm filtered on the British pound time frame too, because now we're trading London. We need to take into consideration London GBP items. So 4:30 in the morning is the next volatility injection, I think. So we're gonna keep watch until then. If you could like the stream, if you haven't already, if you wouldn't mind liking the stream, I would appreciate that. If this is valuable. If it sucks, you know, drop me a comment and see what I can help to improve. Hopefully this is giving you some insights into price action, reading the tape, and reading and studying, hey, where are institutions taking us? What liquidity could we take out next? Where do we need to be careful when we do take that liquidity out? So this 4-minute buy side imbalance, we're seeing this move quite nicely. Let me see if there's anything on the lower time frame here. Nothing too much on the low time frames. So this 4-minute buy side imbalance, this was also using the 2022 model too, cycling through 5-minute, 4-minute, 3-minute, 2-minute, 1-minute. So if any of you have studied Michael or Huddleston's or ICT's 2022 model, That was an example. Sell side got taken, confluence, 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 fair value gap, bullish order block, boom, we entered, we took the profit, right? So while we wait for this, couple of updates for you all. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're sitting now at 11 performance accounts. We were very fortunate in the previous few weeks to make use of that 250K sale. So as you all know, we have this link here. Let me pull this off so that I can just grab this here. And let me see. Okay. So we know that they've extended the Apex themselves. They have extended the current sale for all of these evaluations, specifically the 250K. I would not recommend if you're new to trading, don't use the DBVI BOHK code to get that 250K account. It is very difficult to pass those. I'm not gonna lie. It is very difficult to pass those in one shot. I have blown many of them trying to pass them in one shot. I've been fortunate to land 3 of those, but that's also because I have the excess capital to be able to leverage for that. If you don't have the excess capital, the 50Ks at 90% off is a ridiculous deal. This is what I did to in the beginning. The 50Ks had a much better deal. So that's like 167 times 10% of that, right? $16.7 for an account. You can't beat that. And honestly, you could even just go with a 25K too. It's a much easier to pass and very easy to start to get to profit when you get there. So as you can see, 2 micros, it's not a lot. Your profits are somewhere probably going to be reasonably like $20, $40 at a time. So that's what I'm on the good days where it goes to your profit target and it's not this kind of choppiness following a huge range day. You're going to get your full fill, 2 contracts, 30 handles, $120, right? Yesterday, I had a 100 handle run on 1 micro. That turned out to be a $400 trade. So using 1 micro. So you can definitely make money on using the lowest leverage. So 25Ks, you should only be trading 1 micro. 50Ks, until you build up a buffer, 2 micros, right? You can definitely parlay these up. But in these situations, the London session and Asia session following a huge range day, we expect consolidation, right? So we knew that there's a possibility, and let me get rid of this. It's kind of, you can remember what I taught there, but, so yeah, you can expect consolidation. So when we saw that nice displacement here, we expected that we would take out a minor relative equal high and possibly have that retrace on us, which it did, right? So, this is not the most ideal environment. I think that I have to go physically into work today. I'm not, oh, by the way, you can use this code. This is my code, the DBVI BOHK one, to get the 90% off there. I would, if you're new, just buy 1 or 2. It's the cheapest it will ever be. I've never seen it go lower than 90%. So I'm not going to be buying any more evaluations. I have from an evaluation perspective, I have 4 more 250Ks. They are at varying levels of profit. I think they're at like what 3,000, 1,800, 4,000 profit, $0 profit. I don't like trading in these environments, so I would wait for afternoon session today if there's nothing that forms at New York. And don't blow your accounts on this price action here during the morning, right? Have to preserve. This game is all about preserving capital. So, let's see what else we got here. Let me check the chat. On. Okay, nothing too much in the chat. Yeah, kind of boring price action, right? So 4:30, we're probably gonna like chop until 4:30 a.m. and then at 4:30, watch to see if we have sell side taken out. If we run for sell side here, and look for specifically look for a run on this minor relative equal high low. This should be relative equal low. Whoops. Look for a run on this one, but if it fails to reach all the way down for Asia's short-term low, that this setup from 19,075, 85, 95, 105, 115, it should net you over 30 handles of profit and then some. It should. If we're wrong and we're treating these as a failure, I don't think we're wrong, but at 4:30 a.m., that's when I would look for a sell side to be taken in order to find a trade to take back to take out Asia's high. Okay? Or at least London's high again. I can't imagine they would take these relative equal highs and not reach for at least 19,108 or 19,112, anywhere around this 1910 area. I imagine they would reach for that if they took out this minor low. Okay. Any questions? Any questions for me while we wait this out? Anything you're struggling with? I think I've been pretty good with explaining today. Maybe I haven't put enough lipstick on. This should say 4 minutes. Buy side imbalance. I do trade ICT for those who are new here. I trade Inner Circle Trader. For those of you who are curious about that, it's this person, Michael Huddleston. Everything I've learned on how to trade is from this man's teachings here. He's got a wealth of knowledge here, but it can be overwhelming. So be diligent. Take one at a time if you're studying ICT. And if you don't like ICT, that's totally okay too. That's your prerogative. Find a mentor that you gel with, right? So from a performance perspective, while we wait, I will give you an update on the performance charts. Let me see if I can get this close to the clock too. So where's my snipping tool? I'm gonna block out my contacts. And there we go. Let me make sure I block out some of my my account information. Oops. What's going on here? We gotta block out a whole bunch of them because there's 11 of them, so bear with me here. I'll give you an update on where each performance account is at. Some are in drawdown, some are making their way out of drawdown. Some are not. So, okay, cool. I think that's enough. Okay, good. Nothing else is damning me. Do you guys, Team Push says, do you bounce these trade ideas off anyone and get feedback? I do not. This is all 100% my analysis at this time. One thing I noticed, Team Push, is in the past, I was a part of different Discords, and the problem that you have with too many Discords is that you have too many people barking ideas, making you shift your bias, whereas you, as a trader, would do far better for your own personal development if you just shut everybody out, focused on studying the charts, recording, taking pictures of multiple time frames, putting them somewhere so you can go back and study them, and drawing out the lipstick on it to show you, hey, here's this setup that I've seen today. Let me go back test it 100, 1,000 times and find similar situations where I saw this strategy work. And then if you just do that alone, and I say 100 examples, you probably need closer to 1,000 examples. But you'll get that over time. It's just that experience, right? So I used to do that, and I don't do that anymore. I focus solely on what I am seeing, why it is logical that what I'm seeing and what I'm speculating and expecting, why it should play out. If it doesn't play out, what is the secondary thing here? So looks like we might be pushing. It looks like it did stop here, and it did close within this buy side imbalance here on the 1 minute, and we'll see if it continues any higher here. But yeah, I mean, I don't post my ideas to anybody other than my community here. You'll see me chat ideas in YouTube on the community tab. So over on my channel, looks like we're gonna make a run for this now. But over on the community tab, oftentimes I'll provide updates. I'll give you what I'm looking for and trading to in these chats here. So, like in the chat earlier, Delphine asked me, where do I see us trading to? Well, I gave those examples of what I'm trading to. So, yeah, good question. Heavy duty. Staying disciplined is my biggest struggle, not revenge trading, getting better with time. Yeah, the only thing that you can do with that is be consistent on one or whatever your trading plan is, whatever you're looking for, be consistent on finding that same setup, and then just look back on how many times it failed and how many times it got barely stopped out, and then just to return to it to go in that direction again, right? Versus how many times if you were to enter in the midpoint of those, let's say that your model has you entering at the midpoint or at the top of some of these targets here. Well, the easiest thing to do is to identify what's the quickest form of liquidity that you could pull. So once you see your setup, what's the area of liquidity that could be taken? Well, the quickest one would be short-term highs. So from this entry of mine, 1985 to 1993, that would have been technically your first area of liquidity. Resting liquidity was 19102. And above that, we saw that we traded to that and then immediately sold off, right? So being able to have that Kevlar of seeing hundreds and hundreds and hundreds of your one setup and then seeing how it does fail from time to time, that helps you deal with not revenge trading, because eventually you now know that, hey, if this fails, I know where my stop loss should be. Whenever I take a trade here, I know my stop loss, and you saw this earlier. I moved my stop loss to just below this fair value gap, right? And it didn't get hit. It was close, but it didn't get hit. So we saw that it traded down to here. My entry 1985 down to 1979 is about a 6 or 7 handle loss. If it were to wick down there, then it would have been a 7 or 8 handle loss, easily within my risk parameters. I can then go in with one contract, start again when it returns back to that buy side imbalance. If the trade idea is sound, if the bias is sound, if the weekly expansion is sound, then great. Oh, one thing I forgot to put on my chart today. Where did it go? How could I forget? Midnight opening price was 19,103. Okay. So midnight opening price, 19,103. Anything above that, technically, is reasonable as a premium. Anything below that, reasonable to take longs in a discount. So if you think about a daily manipulation here, this level, anything below this can be treated as support for longs to head higher, right? Team push, thank you for that, Johnny. Yeah, heavy duty, thank you. Yeah, so remember those projections up here, and I'll put these up so that you have them. So you're gonna see if these pan out, then great. But if not, I'm also whatever. 19174. Oops, that didn't work out. So I would have projection target. This would be an expansion projection target for Thursday. I definitely can see us doing that, and I think that's a reasonable expansion target. 19174. If you wanted to target something, 19170 would be better. Perfectly honest, getting out before that level would be far better. There's no guarantee that it's going to hit that level, but I do think that 19,174 is reasonable for today. If it goes on a huge tear, then 19,297 is a little far up there, but that 19,292, where is it? 297. That would be a huge movement. But never say never, but kind of like somewhere around there. This would be like an insane level here. I don't think it's going to get up there, but those are the levels that I'm projecting. You can project them too, but you know, evidence has it that Thursday, while it can expand as well, it can also reverse. So you need to be really wary about what happens at 9:30 a.m. open, right? Because today, from the US side, you have 9:30 a.m. You have 8:30 a.m. unemployment claims. That's going to help drive, and then that's it for the rest of the day. No other major catalysts that I'm aware of. Let me see. Thursday, international trade in goods services, jobless claims. You've got a few 3 month, 6 month, 52-week bill, 3-year note announcements. So that could 11 and 11:30. could lead to further movement. And then, yeah, I don't see anything else much there. So you have to watch out for that 8:30 a.m. move. So it's very possible that if we'll consolidate into 8:30 a.m. and then 8:30 a.m. we'll get a lot of volatility, or a small amount of volatility at least. It's just unemployment claims by itself. So, let's see, Delphine. There is a volume imbalance in the 1 minute between 320 and 321 candle. $320. Yeah. Yeah. Good call, Delphine. We traded up into a premium. And look, this is why we don't trade in the middle here, right? Anybody that was long here, late longs just got crushed thinking that we would run for this liquidity. I think that they're likely, again, like the trade that I outlined for you is look for a run on minor relative equal lows, and I'll see if I'll take this as well. Actually, let me find the right account that I want to do this on. Let's do this on account 65, and we'll do a 10 contract move. Because whenever you have green in an account, move to another account if you can. Because you want to keep you want to have that muscle memory. Remember that, hey, you kept a trade in green and you were able to stop there, right? That helps you. That should help you get to the point where you're able to say, hey, I got in green and I was able to stay disciplined and not have that day turn red, right? Doesn't happen all the time, but when it does, it's a lot easier to do. Let me see if there's a 30-point move there too. 73, 83, 93, 103. Yes, there is. So I'm actually going to probably take one of my evals and see if I could pass one more. 346. So I'm going to be looking for that same trade that I outlined before. Look at all of this that's now being engineered as relative equal highs, right? Look at all that. So we're going to be watching the lower micro time frames as we get down to our minor relative equal lows, right? I fully expect this buy side imbalance to be disrespected in a Judas swing, maybe at 4:30 a.m. So, kind of see how we're framing. We're looking for different plays to frame out at specific times. Time first, then price. Now, if it does take this out in the beginning and maybe it just runs higher, we need to reassess to see, hey, is it running higher to barely make new highs or to just fail out? Or is it running higher, like displacing higher, and hey, we're going to keep on rolling, you know? That I don't know. We're in a macro 403 to 430. I am not aware of any such macro at that time. 350 to 410 I see. Usually there's a macro there from 350 every last segment of time. Oftentimes that showcases where price will head to next. I'm of the impression that 4:30 a.m. we're going to get a movement lower first to head higher. I would like to see sell side taken out. There is a bit of movement left. It's no guarantee that we'll head lower below this, but there is outstanding liquidity on the 15-second chart there that doesn't show up on the 1 minute chart. Let's see. ES is doing oh, ES, this is interesting. So look at ES, right? Same concept here, but Asia's low has been taken already on ES. Asia's high, which is actually, what's this high here? 5372.75. It's relative equal highs. That's amazing. So we have smooth highs on ES. What do you think's going to happen, right? We've taken out this already. Let me see what's happening with the Dow. Dow is kind of just doing its Dow thing. It's taken out Asia low by a lot already. So we have SMT divergence as well. So if NASDAQ, we might not see NASDAQ come back down. We might just see it run up for Asia's highs. If that's the case, then I will scalp to Asia's high because that's where ES is going to go as well. Scalping ES is probably going to be easier. There's probably some fair value gaps in here that are being respected here. But yeah, look at that level of coordination where we have a lower low, and then a lower low on ES. Lower low on Dow, and then we have a low, higher low on NASDAQ. So this is the crack in correlation. If we're looking at SMT divergence, there's a good chance that NASDAQ will not get a removal down there and that it's going to probably skyrocket at 430 or start to push at least. So let's see, 83. You can kind of see how this hasn't really been done much in a 20-point range. 20-point range here. We're still waiting. Heavy duty YM also. Yep, correct. Yep. So we're watching ES, seeing how that plays out while we're watching NASDAQ be the leader on the upside. So I would recommend you keep those targets in mind. Might seem like it's far away now, but it's not that far away. If you get a really nice daily move, then you're gonna, okay, so here we go. ES is starting to push. And I'll look at some micro time frames here. You see this here. All right, so if we see a displacement above here now, then I can treat this as a, let me see if there's anything here. We're in a premium, so it's really risky to be taking longs in this, but ES seems to be moving. And if 430 volatility takes us above here, I will scalp this up to 112. It's not much, but I'll scalp that at least. I would prefer a return down lower first. Like I want to see some candles go lower. ES has 69, 70, 71, 72, 73. Only a 4-point move. It's not very much. 5-minute chart. We're now seeing a little displacement above. 4-minute. That's a few minutes remaining. 3-minute. Nothing crazy on the 3-minute. 2-minute. Saw displacement above. And 1-minute. Okay. All right, so with ES, if ES decides to continue to push, we just created a, so it's at a high of 5369.50, 5369.50. It stopped dead in its tracks at 5369.50. So over here, note that we have engineered relative equal highs now on ES. Same high, same high, same high. I'm not going to take a long here, even if it does make a run for it. It's just not a good practice to be longing in this premium. If anything, you would prefer to wait for something like maybe an optimal trade entry, like this traded down to 79%, right? This, if it trades down below 19,097, maybe there's a shot there. Very tough to say. Generally, if things are very bullish, they won't go down to the 50% mark. They'll just keep on rolling. But we're seeing that here. We're seeing that return to optimal trade entry areas. So I don't know how long-lived this movement up is going to be, but I'm watching ES closely to see how ES ends up playing out. And also note on your real-time hour charts that where we closed yesterday, we're actually going to be in quite a premium, and there'll be a liquidity void waiting beneath us if we open where we're at right now. So we'll see. A lot of this is just waiting. Nothing to do but wait for your setups. So we're noting now that, hey, we're seeing, okay, so ES, we saw, hasn't broken through that relative equal highs yet. We saw a little injection there. Even NASDAQ is holding relative equal highs here. Notice how it's engineering that, right? So if they drop it down, I will take a long either at this fair value gap here, either at this fair value gap here or this volume imbalance. I think a long there could be a good move. Maybe that 61.5 optimal trade entry. I'll try to place a limit order there, and then I'll place my stop loss below this. Oh, it looks like that broke out. ES has still not broken out yet. You can kind of see it's still kind of stuck here. Has not broken out, but NASDAQ might pull it up. If it's on its way upwards, then it's likely going to tackle this. Now, one thing that can happen here, we can trade up to almost this high and then come back down. So we're waiting and watching. We're going to see how this kind of like plays out. We'll continue to adjust as we get closer to 4:30 a.m. Remember, 4:30 a.m. we have our British Construction PMI being released. And if it just runs us up higher and takes out that Asia high, well, so be it. No, it wasn't our trade. We didn't take it. We're okay with that. So we can see the equilibrium point from this run, this most recent dealing range here. We are expecting that price does not return, or it doesn't have a need to return, rather. Okay. ES again has not moved. That's very interesting to me. About 4 minutes. Okay. About 3 minutes remaining. So note that the equilibrium point on this move here, we have this being our equilibrium point here. So if I were to draw a midpoint line there, if I decide to use the bodies of these candles for optimal trade entry, it still puts me roughly at this area there. So now I'm going to keep this dynamic for the time being so that I can have the appropriate midpoints to watch out for, right? NASDAQ does kind of look like it's wanting to spool and head up there. But we'll see. Okay. ES finally broke above those relative equal highs, right? We saw it barely dip below that. So we'll see if ES sells off here or returns to an internal range liquidity on lower time frames. And then we'll see if NASDAQ traded to this rejection block and if it's going to trade lower or if it's just going to smash the Asia high, creating what? Another all-time high, right? This happens a lot. When there's all-time highs, oftentimes new all-time highs are going to get taken because anyone who's shorting is getting squeezed out. They have to buy back their position, which leads to spikes above previous highs. You saw this during Asia session. All-time high. We traded above it. Market orders, limit, sell. People went short. They got squeezed. People went short again. They're getting squeezed. These people will get squeezed as well. So the theory behind all of this, this is the narrative that every single day, and this comes with time, every single day you need to be understanding what's the narrative for where we could expand, right? What can we take out? What's the quickest form of liquidity to reference for us to take out? All right. We have our GBP. We have a fair value gap here that's not quite in our, it's in a premium. So I would prefer waiting for this fair value gap before going long. as this is our new midpoint there. So there's a buy side imbalance, sell side inefficiency here. So either that midpoint there, I think we could trade down to that midpoint. So this is where we start to look down here into the lower time frames. We look to see, hey, short-term lows here, right? Short-term lows got tackled. Chances are we're going to head lower. And we will place a buy order. Actually, let's place it at optimal trade entry. And then let's also, let me see, how big of a move is that? 2 points. I can eat that. So we're going to put one at the buy side imbalance that's at equilibrium. And then we will also put one that is down, one DCA down here if we are able to get there. Oh, whoops, this should actually be 5 and 5. I want to have a 10 contract total risk. I'll keep this at 61.5. Okay. So we've seen NASDAQ sort of tip its hand. I think that I'd like to see us go lower. It doesn't look like price is giving us the option to. And we traded to this high of this down close candle as well. 430, you can see that that medium, it didn't really give us much volatility there. We got a positive number out of the construction PMI, so sentiment is growing that we're in a better spot. So there's a good chance we might not make it down to our 50% mark there. It might just have taken sell side, came down to this bullish order block, and then, or sorry, the buy side imbalance, and it might head off from here. So we might not get our shot there. This whole thing is a bullish breaker though. Low, high, lower, low, higher, high. While I could scalp this for 6 points, it is not worth the risk of potentially this dropping out and heading all the way down here. So I'm going to sit on my hands. The play that I outlined before, if I would have seen price head back down here, maybe stopped at this consequent encouragement, that would have been something, or dropped past this minor relative equal low, that would have been a more solid play to me. Notice all these wicks here. People got stopped out everywhere there. Let's see. Okay, so we see that it traded to this area here and rejected from there. I'm watching to see if London either takes this out or has a failure swing but leaves a relative equal high. That would be what I would like to see next. And then I would like to see Asia session not taken at all if we're bullish. Doesn't look like we might get that though. NASDAQ might just make a run for it. ES has not really done much, but retrace. Does look like NASDAQ is leading right now. The Dow also rising higher. Let's see. The Dow did not make a lower low from the PM session before it, but it created relative equal lows down there. Yeah, not too much of a run here, to be perfectly honest. Definitely were some trades to be taken, but just today, Thursday, London, little 15 handles is pretty solid. If you can find 15 handles, and you can make a career off of 10, 12 handles, honestly. If you take one mini for 12.5 handles, 12 points, maybe 13 handles, you'll be able to have $250 every single trade. This one definitely had more than that. This one had close to 300 if you took one mini. But we're trading micros. We're being very good risk managers. And that's what we're supposed to be. If you want to maintain... Oh, capital, by the way. Do you guys want to update on where I'm at with my performance accounts? Is that interesting to you all? If not, I'm not going to show it. No need to. But just want to gauge the audience here. What are you? Oh, look at this. Look at this. Okay, so I don't want to take this immediately here at 50% if we drop down to here. But notice what happened here. We now have relative equal highs form, and we're looking to see. Oh, it is valuable. Okay, got it. Yes, heavy duty. Okay, I'll show that in a minute. I want to see if this trade pans out. So we're at an equilibrium. We have a 15-minute move here. I'm watching this like a hawk. I'm seeing, because I don't want to take a trade at this immediately, but I want to see, does it immediately react there? So this is kind of key. I will, because of its possibility that it could run down beyond this equilibrium point, there is a buy-side imbalance that we're in right now, but there's a possibility it runs down as well. So I'm not gonna take that just yet, although I probably should have there. So we traded down into discount here. Note that response from trading down into a discount. And we took out a sell side liquidity. It's my belief that there's maybe one more, because the better buy side imbalance is actually down here. Did you guys note that on your charts? This buy side imbalance is actually a more high probability one that I might consider taking. Let me see where we are. I'll set a limit order there. If we spike down there to grab that, then that'll be good. If not, then so. Team push. Heavy duty, yes. POC is 19096. What is are you talking about? What is POC? Are you using like volume session or something? The note this optimal trade entry that we're looking for. We have one drive lower, second drive lower. I'm looking for a third drive lower into outstanding internal range liquidity for us to target external range liquidity out here. Okay. Volume profile, that's right. Okay. Yeah, good. Good for you. That's totally cool. If it works for you, then it works for you, right? Oops. So we see that response off of the midpoint there. It's possible we don't get down to that that optimal trade entry, but one of my rules is that I would, from this low to this high, actually it would be from this high, that would put us closer, not quite in a discount, but there's no other outstanding discount internal range liquidity down here. We've already engaged. So we've already engaged this one multiple times. We failed to get lower. Intermediate term lows continue to rise up. We failed to get lower. So volume imbalance here. There's a volume imbalance right here as well. So these are all considered gaps. These are areas where price has not fully equivalently been distributed. So I imagine we trade down to this buy side imbalance. And then I will take that trade. If we're fortunate enough to get it, I'll take that trade up to Asia's high. ES is traveling quite a bit down. So ES retraced quite a bit here. So this has now engineered relative equal highs up here. All right, so we're at the volume imbalance now. So optimal trade entry was there. I'm looking on the lower time frames to make sure that if there is a big displacement to the upside, I want to make sure I can capture that. But 1, 2, this could have been the third drive down. I guess this could be an outstanding breakaway gap, and this volume imbalance could be the last gap that they traveled down to. But now we're in a discount. From this range low to this range high, we're in a discount. And we're really watching this closely here. Okay? Stop management has to be below the candle which created that sell side, buy side imbalance. We're in a bullish order block here. We failed to make lower lows. And now I can set the majority of profits. Actually, we can take 6 off when we create a new high here. And then I'm going to take 3 off, maybe 2 off here. And then what I'll do as well, it might not get up here, but we'll actually take the majority of our position off here. This might stop out too, by the way. There's no guarantee this won't keep going lower. So for that reason, our stop loss is below the candle here. right? Below the candle which formed the fair value gap. There's a bullish order block here. If it fails to hold, if we see a close beneath the midpoint of this here, so we don't want to see price close below the midpoint here. We want to see price wick, maybe wick down, right? We can accept a wick down here. We do not want to see price close below the midpoint of this bullish order block. Okay? What is wearisome is that we are not seeing an immediate response higher. So if we close below this, then we're in for a pretty heavy drop down into sell side liquidity. So we are going to probably end up taking a loss on this, and we will then look to minor relative equal lows to be taken out next. Okay? So we are, looks like we closed below it, so we're going to get stopped out here. It's moving too far. It shouldn't have gone that far down if it was going to reverse there. So this should be stopped out here. And then once it stops out, we should probably see it run further down. Down towards this this short-term low here. And then we should also see it run towards those relative equal lows down here too. So yeah, I wanted to show you some trades that did not work, right? This is a trade that will not work. It's going to get stopped out. Okay, there you go. So now we wait and we go down with good risk management. We go down to 5 contracts and we look for what is liquidity drawing for, right? So there's a volume imbalance down here. We have ES running for its short-term lows. I think that what we can do is we can look to see if there's, because that was the last internal range liquidity and it looks like it bought up from there. Sell side imbalance still here. So that range is no longer being respected here, right? So we closed below this bullish order block, 15-minute. We closed, we have about 11 minutes remaining, but good chance that we're going to end up aiming for sell side liquidity now. And let's see what happens. Let's see what kind of reaction we get once we take out these sell side liquidities here. Specifically, we want to see what happens at this juncture here. I want to see how far do we get. Do we take out this low here and then immediately respond from there? I don't know. We're going to see. This intermediate term low, this is important here. If we are bullish, we don't necessarily want to see that traded to. I'm going to get rid of the indicator there. Get rid of this BISI as well. We have clean charts. This is a rejection block here too. So we're watching this. If we start to see displacement to the upside, I would no issue with re-entering. We're at 450. I'm gonna have a hard stop at 5 o'clock though, because I need to try to get back to sleep. It's been much more difficult to fall back asleep lately. And I have to go into work today, so so I want to see, do we see displacement back to the upside? If so, then I'll re-enter. Until I see that displacement, I'm assuming we will creep lower. So if I don't see anything within the next 10 minutes or so, I will not re-enter. Okay, nothing's really happening here. ES, look at ES. So ES took that relative equal high and then immediately sold off. So what does it have now? Has this fair value gap. Could be reaching for this. Don't know. Oh, there's this displacement, so I'm going to buy. I do consider that to be displacement there, but I am curious if it's going to go down on me there. So we'll try once more with 5 contracts here. It can go down to here. So if it does go down to this, I will add 1 DCA. But if not, then so be it. So here we need to manage our position by setting, if this does count as a reversal here, we want to be able to take profit at this high and this short-term high here. And then one more at Asia's high. And then I can leave a runner overnight. Okay. So will this recoup everything? No, but it will limit the risk drawdown if we have this trade run against us, right? So having the contracts is a really good practice so that you can lose less money if the trade goes against your bias, right? So we saw that our optimal trade entry did not work out there. We are keeping our stop loss now is below the mean threshold of this down close candle, which has displacement higher. And we are seeing displacement higher here so far. Nothing to phone home about, but now we've had price trade below this volume imbalance, and we've had price trade back above it. So now we see this volume imbalance as a balanced price range. So If it rejects from here, we may need to close out our trade. So I want to see this. I want to see this serve as a breakaway gap, and I don't want price to return back to it. So let me check one thing here. Okay, so this is going to get stopped out again, right? That balanced price range. I guess it can technically reach below, but worst case is we need to, like, this is the last line of defense here. It's broken through 1, 2, and then if it breaks through here, 3, then we're done with this trade to the upside, and we'll take a smaller loss, but we won't take nearly as much of a loss as our initial entry. And we'll know that for the time being, we're offsides and price wants to be taken lower. So now we're seeing price head down into this area. I think we are, at the time, I believe we might be offsides, and that the algorithm wants to take the price lower. So we'll probably see a spike down real quick there. ES looks like it wants to head for those relative equal lows as well. So what we might end up seeing instead, we might end up seeing price, and actually I should have added there if I truly believed in this play, but there's a shot that this doesn't move upwards at all. ES is not really helping here. It looks like it wants to go for those short-term lows instead. Where is this wick? This wick. So at this time, I'm going to move my stop loss to just below this fair value gap. Technically, it should be below this candle, which makes it. But I have a good feeling that either way, even if I put my stop loss down here, so that'd be a 6-handle stop loss, that it could be spiked to and taken. So we'll see. Notice how there's no immediate reaction and no immediate like burst higher. So if we see a candle close below this SIBI, well, that's it. So you can kind of see how my loss is roughly 60% of the 100. What was my realized loss? 108. So there were 2 attempts there. I saw this as potential displacement, but we were offsides. ES was drawing the market down. It's likely going to head further down. So 171 loss, I can accept that, right? Ken, price bounced at previous day close, VWAP confluence. Cool. Okay, we are at 5 o'clock now, so I'm not really seeing the price action that I want to see. Overall, I'm still biased long, but I think they're going to take it shorter first. I think that ES wants to target some of its short-term lows there, potentially. So yeah. So you saw a win earlier, really nice 15 handle move, and you saw me taking a loss with a play that looked as if it was similar to my model. And I think that's going to be it for me today. I have to get some sleep and get ready for work. So none of this is easy trading range. This is not like the morning was the easiest, right? That trade we took in the morning, that one was clean, right? This one was very, very clean. In this case, we don't know if this is clean, right? We technically dropped down to equilibrium. So, I mean, we could try, but look at these. These are relative equal lows, right? I fully expect this to be engaged, and then this short-term low potentially to be engaged. So I wouldn't trust a run up here. Could be wrong, but these are just too clean to not be taken out. So yeah, heavy duty, sleep well. Thanks for the stream. Team Push, thanks for all the info and advice. Thank you. Yeah, absolutely. So I hope you learned something here today. I hope this was valuable. And you got to see me have a successful trade, and look at that spike up there. So annoying. So maybe it runs now and just takes everything out. I would be surprised if it does, but I think that's a stop run up there. You have such relative equal lows down here. Here's where I might consider. You look at how relative equal highs these are too. So last thing I'll leave you with for today is the how I'm doing update. Okay. So Delphine, thanks for your time. Johnny, have a good rest before work. Thank you. So how have I been doing on my performance accounts? So let's zoom this out. Okay, so here are my performance accounts. You can see that I've got a 50K that's ready for another withdrawal. 150Ks, I haven't really touched these too much. This account I just traded, so I'll be in drawdown about $171 total. Not bad, easily retrievable. So this will be minus 160, 100, 500, minus 1500 or so. Another 50K I haven't traded too much. Another 50K that's in drawdown. And then some of the 250K accounts that I passed. I haven't traded them at all yet. So that's where I'm at right now. Just slowly building up with good risk management. Very slowly, very methodically. Each one of these I paid a lifetime fee on the Apex trader funding. So those I am holding them for the long run, and a lot of those accounts have been live since maybe February or so. So March, April, May, June. If you are paying the Rhythmic monthly fee, those have already paid for themselves, right? So yeah, I think that's the update. So thanks a lot for tuning in, everybody. If you haven't already, please do like the stream, like the video, and subscribe. Really helps out the channel. Yeah, I'll still be around here, but not physically on my computer today. So I'm gonna close the stream for today. But yeah, it was good trading London. I'm getting more. It's tough. I'm getting more used to it. Oh, one last gem. So something that's really important and really key for you traders. There was another reason why that trade we took in the morning was really high probability, right? So let's go back here. So why was this a high probability trade? Well, if we look back from 3 till 4 a.m., this is a time of day where this is one of the silver bullet time of days. So we saw that we had taken out sell side liquidity. We saw displacement. We saw return, optimal trade entry, lots of confluences around this. So super high probability trade. And we took that to terminus here and exited right before. So that time before price, very important. And you saw how we got chopped out of this kind of stuff here, right? Not exactly the right time to trade. I'd wait until 8:30 a.m. Today, wait for that news to occur, and then look for what kind of gaps form to be retraced to. So, cool. All right, folks. Thanks for watching, and good luck trading today. I hope you make a lot of great profits, but most importantly, I hope you manage your risk well today. And yeah, drop some comments here if questions come up after the fact, and hopefully this was helpful. So take care, everybody. Talk soon. See ya. I will. Today's Thursday. I'll probably try to trade. Oh gosh, non-farm payroll. Yeah, there's a good chance I'm not going to stream early morning on Friday. Just because it's going to be like really bad price action before non-farm payroll. So, non-farm payroll Friday, I'll try to stream during that all the way up until New York Open. So we'll see you tomorrow. Okay? Thank you so much. Take care. Have a good day.